following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. We're going to have a long weekend here. And today, as you know, big jobs report. And normal course of action before a weekend, trading's relatively light. And if you compound that with a huge report, might have some herky-jerky movements for a while this morning without question. I mean, this is kind of the most uncertain situation I've seen in a long time. I mean, will they raise rates or will they not raise rates? I know you guys have pondered that, but my feeling on it is that's a foregone conclusion that they're not going to raise rates, no matter what these people say and have been saying for a while on the boob tube over here. But you know what? Anything can happen, and you've got to take it for what it's worth. In my opinion, you always need to sit tight and wait for the reaction instead of the initial action and trade the reaction. So here we go on the S&Ps. We're obviously down this morning. Think about it this way. The notes and bonds are up. The market's down. So we're trying to factor in right now. And the market seemingly is like, okay, well, God, they might raise rates. Oh, my God, a quarter point's going to kill the entire economy if they raise the rates. But they're not. They're probably not going to raise rates. And, again, this is not decided today. And they're not raising rates for a reason. I mean, I think the market needs to really understand and digest that, stepping back from the whole thing. So as we look at, the possibility of raising rates, it's a catch-22. I mean, you raise rates because you feel like the economy is getting overheated. In my opinion, that's not the case. And I think we've actually, gone through a kind of a fake run here in the markets. And then what do? Do you have any bullets left in your holster? I don't think so. And we're probably going to see some downturns. I mean, look at what's kind of, starting to foreshadow that type of economic event. And, it's rolling the dice right now on the jobs report, but also on the rates. So we're going to have volatility, I guess, is what I'm going back to, and continue to have this volatility for a while. Here's the S&Ps. We talked about yesterday getting back down below at some point below this 1945, 1947, 1948 to really start looking at it from the short side. Now, you might say, well, why didn't you tell me to short it 1975 up top? That's not the way we operate. We have to get some confirmations. And right now, where were the targets on that trade? 1921.22. And what did we hit this morning? 1922. Okay, so these levels, so to speak, and these inflection points and these so-called balanced areas and fair auctions, we wanted to get back in the balanced area. That happened. It's okay if we missed 30 points higher than that. That's okay. This thing could have kept going. And what do you do before the report? In my opinion, you do not roll the dice. They could take more jobs, less jobs, any other way. Remember, they're going to try to, this is a barometer, possibly, in my opinion, it doesn't matter. But they will, the market participants will take this report and try to factor it into, how's that going to affect Yellen raising or not raising rates? I mean, they're not going to raise rates. So anyway, so you're going to have some volatility. In my opinion, the inflection points to really seriously pay attention to are 1922, 1945, 47, 48, that general area up there. And then you got way up top 1962. All right, now what does that mean? That means that if we start breaking down below 1922, I think you've got to look at that as resistance and place stops above, even though we're down relatively significantly this morning. And then if we rattle around above this inflection point, 1922, these are our 240s. These are the only thing we have a situation to hang on to. Here's our weekly. We know what the drill is there. We've talked about retesting these lows at some point based on the barometer of our breadth situation. And here's our daily. So we talked about, I thought we were going to form a little bit of a pennant flag type situation on the way down, a continuation pattern a little bit lower than this. We ratcheted up a little bit higher. Again, guys, we've been kind of informing the higher lows, lower highs type situation. This could cause a breakout here, what's going on today. But, again, if you take a look at this and this profile up top, this is, in my opinion, a little bit of a continuation. Obviously, there's extreme volatility. I'm talking 100-point S&P moves around, 2-3 days at a time. But again, what do you do today? Since there's nothing to hang on to on the weekly and daily, and there's no hints of a new profile appearing, that's bearish in nature to keep the long-term trend going down. All right, so therefore, we are going to look at these shorter time frame inflection points, and that's the ones I pointed out earlier. And any breakdowns below 1922 are going to have to be looked at with that as a lid and stops above. Now, if we start, let's say we rally up this morning. Let's say after the report, we get back into 1945, 47. I'm going to look at that as a chance to short. I'm going to look at breakdowns below 1922 as a chance to short. And I'm going to look at rallies all the way up to 1962 as a chance to short. But I'm going to be hitting stops all along the way. Okay, if that does not happen exactly how we theoretically plan this out, all right? That's the situation on the S&Ps. Good note here, Australian dollar. Again, we've been, these are nice trades here, and these are ones that continue to work out. And again, we talked about things not being on sale. Here's the situation. No new profiles attempting to appear. The euro, I love this too. We got back down below that 112.2507, that POC on the weekly, the for highs on the daily. And guess what? We talked about the initial targets, and check this out. There it is. Lows yesterday, 110.87. Guess where that unfair low is? 110.87 to the tick. All right. So as we migrate down below some of these numbers and we wait for that conviction, just like we did on the S&Ps, you're not going to catch the highs. You're not going to catch the lows. We talk about the initial targets, 110.87. That's happened. Thank God. Saved us some money. Got a chance to possibly re-short higher or just wait and see what's this going to happen. And then ultimate targets, 109.49 down below. All right. We talked about the dollar. This is really, really interesting and nice that we've, again, closed last week above. We come back and retest that number, 95.30. And then guess what? The next target above, we've talked about 96.70, and look how this works. All right. So we've gotten, to the tick on a lot of different things that we've already looked at. We talked about ultimately targets up top, I think, on the dollar in the interim are going to be 97.10, 97.11, but you've got another higher target on this, 99.51. And again, if we raise rates, that's going to get there really, really quick. If we don't raise rates, again, dollar might see some short-term weakness, but if you want to, not be subject to that, it's always good to just sit on the sidelines and wait for that news to come out. So again, you've got some points in this. It's been a nice little situation to take advantage of. And the other one that I've been kind of pounding the table about, the Canadian dollar not being finished. Again, here we go. Teflon coated, no new profiles attempting to appear. Things on their highs go higher, things on their lows go lower, just like the Australian dollar. Checking the den there. Okay. Let me see if I can get my e-signal to work. All right, so numbers on the NASDAQ, let's just hit those because we got this report coming out at 8:30. I know you guys probably want to just understand where some major inflection points are. Again, very similar to the S&Ps on the weekly and daily. Let's go to the 240. A little bit weaker situation. You got 42.33 is something to focus on here if you're doing some day trading. Long-term investors, again, I think you are looking for, or long-term shortists, I think you're looking for inflection points to sell with stops, but the long-term investor literally should be out of this market right now. And that market was breached And again, we talk about day trading, we talk about swing trading, things like that. I'm going to go back to our long-term September contract here, 2060. Remember, that is a breaking point, and that closed below, even though it was a massive run down. I mean, this is a long-term investor warning sign. I don't give a crap about the death cross and all that. That was just kind of added extra info. But when we start having movements below 2060 on a long term, that is and I was impressed with this thing just kind of hanging around the house for a long time. Actually, it was starting to get on my nerves, but on my general thoughts. But when we get below 2060, that's the long-term investor sign. And we talked about that ahead of time. If you're joining this show late and you're kind of holding a portfolio, we could head lower. You buy insurance on your house, you get the car insurance in case something happens wrong. I don't know why people don't buy insurance and just pay for that insurance on their portfolios if they're kind of doing the thing themselves. And that means selling calls, buying puts. And we can have a whole week-long conversation about that. But, I don't think this is over. Now the volatility's here. And if you're buying insurance now, it's going to cost you a little more. Again, we can talk about that for days. Let's take a look at the DAX really quick. This is something we've been paying attention to. And just to kind of point out, look at that. Interesting, 10,395 yesterday. We talked about if we get back up in there, it's time to lay the wood to it. 10,380. Check that out. Very interesting. Let's hit the other usual suspects here. Gold. And gold is, again, I'm not a big fan of this. This report's huge. You can roll the dice. My general feelings on gold, believe it or not, are for this to head lower, hit 1114 and then 1086 down below. Again, you got to put stops above. Give yourself a little room, probably above 1130 on this one. Again, it seems like there's something wrong with gold to me. Silver, very similar situation. This is December silver. Profiles appearing above, or excuse me, inflection points way above and getting back down below. We've had some volatility this week. Silver literally making lower lows and higher lows on Navigator. I'm a little bit more concerned about being short this right now. And gold could actually drag this down. So we'll talk about that relationship a little bit more when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Sorry about that. We were talking about silver and gold. Let's see. Get back to silver here really quick. What I was going to just finish saying is I'm a little bit bigger fan of going short gold than being short silver. Here's the short-term numbers on silver. Again, that weekly unfair low we just looked at a little bit, and the action here, just not exactly excited about going short silver relative to gold. I'd rather be short gold. Let's see. Okay, so we're going to go back to something that we've been talking about. I forgot to mention Japanese yen. Now, again, yesterday, and we talked about this morning already, the S&Ps, why did we wait 30 points for it to get below that area to start looking at it with conviction again? Because, we just are not into picking tops and bottoms. It's a little bit of a high-risk game. Same thing with the yen here. All right. We talked about we have to get back above 122.36. That's the weekly unfair lows, and that did not happen. All right. On a long-term basis, you should be sitting on the sidelines on this, and we had the profile up here above. It's very, and then that's another 122 and some change up there too. So even though you may have looked at this and said, thanks, Logan, 116 to 122. You screwed me on 600 pips by not telling me to buy it down there. Again, I'm a big fan and have been a big fan for the last year and a half of buying the Japanese yen because there was really not any technical damage, so to speak. A couple little blips along the way that we had to get stopped out, but that was about a 2,500 pip ride that was relatively painless, and then we have to take the signs for what they are. And now, we just don't have any new profiles in the weekly or daily. There's really no reasons to even play around with this at this stage on the long side. And we've been talking about that. So this is a very, similar situation that we just discussed on a micro scale with the S&Ps this morning. So just wanted to go back and revisit that. We were talking yesterday about the Dow 30 stocks and kind of where they're at. We were going through them individually. I think I got as low as Goldman Sachs. I don't think I got into Home Depot. I'd like to, maybe if we don't have any big questions, and feel free to call into the show anytime, guys. We've got a big report coming out over this break. So, again, you got to probably pay attention to what's going on after this report. I understand that, but feel free to call in anytime. Let's take a look at Facebook really quick. Okay, so, again, has acted relatively well, I must say, even though we come off and remember, that yellow bar appearing, new profile, very wide. That's a target type situation that we noticed. That's within the scanner. And again, you go into the scanner, you find these instruments. I'm going to go to my dashboard. You set up your custom lists. I've got just a small one set up here, and you put your kind of favorites, usual suspects, whatever, and you can see real time where these things are changing. So I'm going to go back to my dashboard, and I'm going to go back to Facebook here really quick. There it is. Okay. All right. So as you can see, balance situation, daily, weekly, nothing to be super alarmed at. Bottom of our profile, 87.58 on the 240. So, what does this mean? I'm going to just kind of peruse through here. Here's a daily. Again, acting relatively well, all things considered. Here's the 240. So pre-market, I guess we're trading 87.70, right? So the inflection points you can pay attention to on Facebook here to kind of bridge down below into the, next stop down will be those daily unfurloughs. 91.48 up top. Really, I think this stock weathers storms extremely well. I think 1 billion unique people access Facebook the other day. That is 1 out of every 7 people on the planet. I don't necessarily think that's a bad thing for the stock. But again, the price is what it is, and that's what the market has determined, and things can change. So make sure you got your stops in. 81.31 for long-term investors. That's the uncle point. Again, we're going to have some volatility because of the market conditions right now. All right, before this report, got about 10 seconds before we go to break. Just want to point out the levels again on the S&P. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals.
And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Okay, the report's out. You guys know what the drill is. You've been posting it in the den. Let's just take a look at the reactions here. I really don't care what the numbers are. The reaction is the reaction, or the action is the action. So here's the 10-year. 10-year seeming to weather the storm a little bit pretty well. 5.1%, only 173,000 jobs added, but average last 3 months, I think in the 220 range. Gold's not really reacting too crazy here. Again, I think the cat's out of the barn. So now the rest of the day, I think everybody can go home. It's a big weekend, so just kind of be aware of that. With that kind of news out, again, we talked about the numbers here. Let's just look at the S&Ps. Here we go. 1921, 1922 is held. I'm not a big fan of going long this particular index right now, no matter what. Again, I think the rhetoric, no matter what these jobs reports say, is, Yellen and her gang are going to look at the Chinese situation. They're going to look at this. They're going to look at that. They're going to throw in some other things, and they're going to say, you know what? We're going to just sit tight. All right. So that's the deal there. And then on the treasuries, that's my opinion. That could be wrong. On the treasuries, the big number here, 127.11. I think you can kind of bank on that. Stops below. And I want to point out something. I mean, I knew some guys. We had a platform ourselves, just kind of to go off course here a little bit. If you see this on the 10-year, this is the action. Went to 128.04 and back down to 127.4. Actually, what was that? 11 down there. Sorry, 13 and a half. So why did this thing go straight up before it kind of settled back? Well, when you have a platform and you're running a platform, and listen to this closely, if you allow the user on an order entry system to place stops locally, that's not very secure. All right. So when you place stops locally on your machine and they're housed on your machine, if your machine has a problem or connectivity or whatever, then that stop's not going to get enacted. So therefore, stops are sent up to the order entry system and housed in a database. All right. Now, if you don't think the owner of that platform and everybody working there knows where those majority of stops are, you're on glue. All right. So when you see these things doing these moves, that is more than likely eclipsing everybody that wanted to get short and had put the stops in and were banking on some kind of number that was going to make the bonds or notes fall off. But then they don't get the free lunch, okay, because those things happen and they happen for a reason. All right. And that's the maximum amount of situation that they needed to go up to eclipse the maximum amount of stops. Does that make sense? Don't know if anybody's listening to this. All right. So be aware of that. It's something that's a fact in electronic trading. Okay. Sad to say, but it is true. Okay. So again, the S&Ps, here we go. Not exactly excited about shorting this yet. We need to get below here, and we need to use that as a resistance level. Here's the 60-minute on the S&Ps. This is actually a pretty sick reaction to that report. And let's take a look at the notes again. I'm sorry, I'm kind of day trading here in my repertoire today. Notes and bonds, or notes especially, again, continuing to start to move north again. Again, stops on this particular trade today below 127.11 based on your appetite for risk. Let's take a look at gold. Gold's, doing a little bit of a move up here, but I want to take a look at our 240s for you guys for a second. There's that 1133.5. I'm not a big fan of going long gold. This has kind of been a little bit of a pass here on my part. So may have met some targets already on gold, and there they are. So, again, I'd like to see this thing settle back down below 1125 for my personal preference. The volatility happened around there. Absolutely, those stops are known on the order server, so be aware of those herky-jerky reactions right around the report. Let's take a look at crude oil relative to that report. Not a lot of reaction there. Spiked up to 47.20. Here's the latest support levels on this, right around 46.47. In my opinion, I think we can make a run back up to 49. So be aware of that. 48.71 to be exact. And big time stops have to be below that 43.5 area. Let's take a look at November beans really quick. I'll just kind of go back to this because it's. Did you guys see the UNC South Carolina game last night? It was awful. I drove to Charlotte and watched that with a friend of mine who runs this grain elevator that I talk to all the time. Carolina football off to a good start. Actually, both teams look terrible. I think they're both going to have losing seasons. 861. I like the way this thing is hanging out down here on these 240 levels and just kind of consolidating. That's usually indicative of another move down. So I'm looking at 850 still as the target. Again, to revisit where we had before 855 on these November beans. I think we can head lower. I know that doesn't make a lot of sense fundamentally to some folks, but it is what it is, and the action is what the action is. So. All righty, let's take a look at a couple of instruments here. Apple. If you guys trading stocks, okay. S&Ps are at 1924. All right, so Apple, this we're trading 109.50 right now. Apple's got a big time kind of barrier, which is again, we talk about POCs on wide profiles there. That's at around 109.96. Let's just call it 110. And I'm sorry, let me make sure I said that right. That is 109.96, 110. And then you've got some other breaches here that may happen. So I'm going to be full on short this thing again. There was a shorting opportunity, as you can see, around 113.30, but you're kind of sitting, languishing down here. Getting below 109 is going to really put me back in getting on the short gas pedal with this particular stock. This is our weekly view. If you want to wait, the reason being is we're going to have a new profile lock in on Apple for the first time since May on this particular stock. It's going to give you some new inflection points, some new resistance areas, in my opinion, to pay attention to on Apple. So if you want to wait on this one, you got some great information getting ready to come out. See what's happening on Apple. I mean, this was kind of, and I did a Bloomberg brief about this, actually. If you want to go to Bloomberg and look up, actually, I'll put that in the den after this break. Just remind me. But the whole concept of the breakdown on Apple was based on getting below these, major profiles on our weekly, combined with this divergence action that we had in our navigator. Now we're crossing below zero, and that's just sick. So, I don't think that this is over for Apple. So keep that in mind. Let's take a look at my favorite stock, IBM. So it's great that we had a little bit of a rally on this to get short more, in my opinion. You got 150.26 stops above on that one, and that's kind of the way I'm looking at this one, giving myself some room on this particular stock. All right, going back to some of the Dow stocks that we didn't finish with yesterday, I want to take a look at, well, let me first take a look at Netflix for you, because I had some emails about that. All right, so pre-market we're trading 98. I'm pretty sure that's a good print. Yep. All right, so the deal on Netflix, we're back down into the maximum buy point here on support on Netflix, and we talked about waiting patiently until we did come down on this stock. So you got the, again, the top of the box on the weekly combined with that bottom of the box on the daily. That's a little bit of a DMZ that you can kind of count on and orient stops around. And if you're looking to buy a strong stock, I think you've had a good pullback in this, and that's what you were kind of waiting for on Netflix. So that's the answer to that. Let's take a look at Home Depot really quick. All right, so let me see if this is real. Yeah, it looks like 115.79 pre-market. Does that sound about right? All right, so again, this is not a stock to look at from the short side, in my opinion. You've got major support around 114 to 117. Okay, so again, you could play stops above there. This thing could give it up hard, but I think you got better shorting opportunities out there. Let's take a look at Intel. All right. So again, nice pullback for a stock that, big market cap, stops below 28.12 now on the long side. I'm not a big fan of going long stocks in general because of the market conditions, but put a gun to my head, that's where we're at on Intel. I think you can play that relatively safe for a decent risk reward up into the 31 area and even higher on the long side. But again, I'm not a big fan of buying stocks right now. Let's take a look at the numbers again on the S&Ps. Again, 1922 is held just to give some updates. We're going to have to wait until we see some migration below there. In my opinion, not a big fan of going long the S&Ps right now. 10-year backing off a little bit. Key number there is 127.11, stops below there. I think we're going to have mass exodus of the exchange participants early today, lunchtime. It's going to be extremely light this afternoon, if not an hour after the opening. I think everybody's going to adjust their positions, give it an hour, see how it works, and then hit the door for the Hamptons. Okay. Going to take a look at Altria. Had some emails about this one. Again, this is not a stock I think you should have on your short list. I think you've got decent support at 52.88 down into or up into 53.27. So that's kind of the way this looks. I like this stock, actually. It's probably going to be a defensive situation for a lot of folks in this type of environment. Do people smoke more and drink more in bad times? Maybe this is an indicator. All right, let's take a look at Microsoft. Okay, so, how do you play this? All things considered, we've had a little bit of adjustment here on a stock that's got a market cap that's insane. I'd like to see this thing get back above 44.36 to get long. I'm not a big fan of going short this stock. That's the drill there. Taking a look at our breadth charts yesterday afternoon, we're getting some stocks to open now. We're still really overbearingly negative on the long term, which means I'm selling resistance points, period, on the index itself. Let's take a look at the ETFs really quick. This is our long term, every ETF in the big nine from the SPDR group, negative. Here's our daily, one thing positive, that's the XLE. No mystery there. 4 hour, 1 hour. Couple of green shoots here, but at least you're able to see relative to profiles and the net breadth situation, what the short term, next short term up, daily and weekly are. The most punished situation, obviously, is the XLF. We've been talking about that, and it's ranked down below. And we're going to take a look at, sorry here, Wells Fargo, the bank with the best service on the planet. I'm kidding. Again, if you use this type of technology, I will call it, you should not be long-term investor in this thing anymore. And should you get back in? Is it time to get back in? In my opinion, no. This profile above, all these bank stocks, I think we could drift a little bit lower, and I think the XLF is forecasting that we're not going to get any rate raises. All right, so that's another indicator in itself. I think Tom's been talking about that. So that's anything can happen, but I'm telling you right now, this is not a pretty picture. JP Morgan, all these guys are in a similar situation. Let's take a look at Morgan Stanley. We're going to come back right after the break, wrap it up. Then you guys can wrap it up too, hopefully early, and get out of this thing.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, S&P's giving it up. I know you know that. Real-time quotes here just showing you this is why we wait, and anything could have happened, but as you can see, there's a flush once we get below these profiles here, 1922 to be exact. Now you've got a situation where you can use that as something to lean on and orient stops around. Things don't go in a straight line. We're going to have some, extra little hickeys on this, in my opinion. Bonds, notes, acting accordingly. Not as good as I would expect and hope here, but again, stops below 127.11. We're going to take a look at October natural gas really quick. This is something, believe it or not, I think could head lower. You got 2.751 now. You got to get back above. You got to have a weekly close above there. Then you got to use that as support if you're thinking about going long. That's just the way this is right now. This is just technically terrible action to do a flush and get everybody and their brother out of this thing. That's just the way I'm looking at it. It's just not wanting to get away from this bottom. And you know what that means. Let's take a look at, it's hard to short things on their lows, but that's the way that works. Let's take a look at, what else was it? Copper, December copper. Let me go to that really quick. December copper, there we go. Yeah, got about 2 minutes left here. December copper, a little bit different situation. I think since you've got this orange bar, Now you got to wait for that profile to appear. We'll have it in the scanner, and you'll be able to leverage off of that. And, do I think copper is going to turn around? You could start nibbling, taking some shots down here, but you really need to get back above 2.3856 and close above there to really start seeing a change of the guard on December copper. Okay, that's the drill there. Take a look at the spiders. Somebody's asking me to pull that up. I don't like to analyze the spiders. I like to analyze the futures because you get much more of a 24-hour volume session. And as we know, overnight trading now is much more impacting and real than it used to be 10, 15 years ago, or 10 years ago even, or 5 years ago for that matter. So again, we don't have as much to analyze here. We're trading 193.47 pre-market. This is the situation. That's where we topped out on the futures at 1968 or so. What was it? Let me go back and reference that. It's interesting how these things coincide with each other. So let's see. That was the other day. Yeah, 1980, 85, somewhere in there. That's when we hit those 240 highs again. And that was the spider unfair high. I wasn't even looking at this. I rarely look at the spiders. But again, you can kind of listen to me and look, understand the futures pressure points and then act accordingly on the spiders. But, what do we do with this? I'm a huge fan of being short and selling resistance points and opting out on all longs, all bounces, all support areas. Just use those support areas, in my opinion, to take pieces of the short off and to be able to re-add. So wrapping it up today, you got a kind of a big area around 1922. We got a pretty volatile day ahead of us today. All right, guys, stay tuned for Larry, and then Tom and Tommy at 10, Basil at 11, Nico and Paige at noon, Steve Rhodes at 1, and then Tom O'Brien again, 3 to 5. See you Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.